To many people, a 401k is their first experience investing. And so oftentimes people are presented with a list of fund options to select, and they just randomly throw a dart at a dartboard, pick a couple funds that look good, that are performing well, and that's the amount of due diligence they do, and they move forward. So get a pencil, get a piece of paper. I'm gonna teach you 4 key things that I have learned and that I teach people when constructing their 401k and how to save. Okay, so the first thing is asset allocation. The first thing you need to know is stocks and bonds. Stocks and bonds generally are your 2 main asset categories. Stocks over time are going to increase a lot more in value, but they're going to have a lot more volatility, meaning they're going to do a lot of this. Bonds are going to be more stable, but they're just not going to provide that long-term growth that stocks have historically done. So making sure you pick the right amount of stocks and bonds is critical. You know, if you're young and you have a long time on your side, load up on stocks. Personally, you know, you definitely have the ability to do that as long as you could stomach potentially 30 to 40% downturns. All right, so that's the first point. The second point is making sure that you're investing to get the match. Too often I see people putting away 1%, 2%, and they need to be putting away more. Oftentimes companies will only contribute to your account if you put in a certain amount. Let's say it's 3%. The company will match your contributions dollar for dollar up to 3%. That's just an example, okay? Each situation is gonna be different, but make sure you look into your plan documents, talk to HR, whoever, to make sure that you're investing enough to get the full company match. Otherwise, you're wasting money and leaving it on the table. The other thing with that too, especially with younger investors, is they go, well, I can't invest. I got student loan debt and I got all these other things I got to take care of. Listen, you need to invest, you need to make it work, you need to let compounding work for you. Over time, you'll be glad you did, and it's really gonna set you up for success. The third thing that I see a lot is determining between traditional and Roth 401ks, if you have that option at work. So the basic premise is traditional 401ks, the money going in, you get a tax deduction, but later down the road when you take the money out, you pay income taxes. The opposite is true of Roths. You pay taxes on the money you put in, but then that growth over time, when you take money out, it's tax-free, all right? As a general rule of thumb, if your taxes are projected to be higher or the same in retirement, put money in a Roth 401k. If you expect your tax rate to be lower in retirement, put it in a traditional 401k. Usually for young investors, their tax rate is lower now than it will be in retirement. So Roth is a great option, but again, highly personalized. The fourth thing is savings rate. So too often I see people putting in 1%, 2%. As a general rule of thumb, the basic savings rate is 10%. So too often people go, well, I'm saving 2%. There's no way I could get to 10% overnight, to which I'd agree. That's too much of a change. It would require big lifestyle changes. But here's a tip, just put in 1 additional percent this year. See how much that change will make. The next year, put in another 1%. Over time, these small changes make a big change. Carl Richards has a great illustration on this and how it can make a substantial impact over your lifetime. I wrote an article on this, kind of outlining all these different areas that you can do to improve your investing experience, making sure you're saving enough, choosing between the right types of accounts. If you need help with your 401k in different planning scenarios, give me a call or visit our website. I'd love to talk with you.